Whenever there's a big event like what happened today with the Fed increasing the rates by 0.75%, some investors they think this is a great opportunity to buy or sell stock, and some people will actually want to play options. Some of us are very conservative, and some of us have to start making decisions based on emotions. So today, let's find out what Christian did, what Xander did, and of course, what did I do? Welcome, everybody. This is CyberBulls, episode 9. Big day. Feds made a move. Christian, you didn't sound a little sad today. Tell me what's going on with you.
So I'll be upfront. I hate Fed Day, especially when these kind of Fed days when it actually means something. Because back in the day, we had a lot of Fed meetings, and it was just we knew it was coming. It was very cut and dry, no excitement. But the ones now are very volatile. And today we saw it again. So yeah, so Powell came out and he basically remained hawkish. He's pushing hard on the market. He cited past inflation. So I saw some people like Gary Black talk about he's looking backwards and not forwards, which is the risk to the market, right?
Mhm.
Because if they keep pushing hard and it looks like that's where they're going, what can this economy take, right? It doesn't take much for the tipping point, and when the market sees it, it's going to start to roll over. And we saw that a little bit today, right? The initial reaction, it's usually wrong, and then we got another reaction, and after rallying, we came back down. So I think the market did not like it. It was more hawkish. What was priced into the market at the end of the year in 23 and 24 actually was lower than where the looks like the Fed wants to go. So again, the market has to re-rate that. And with these higher interest rates, like I talked about yesterday, we depend on credit. So as mortgages get more expensive, credit cards get more expensive, eventually it's going to take a toll on the consumer, and that is the risk to the downside, and that's the risk to equities in general. So very, very bearish. Not good for the stock market for the short term. So we'll see how the market reacts tomorrow, but that's a quick little opening salvo on it.
Xander, did you know that the stock was going to do what it did today? Like, it kind of like stayed steady, and then it started rising right after they announced it, and then it plummeted at the end. Did you know that that was going to do that?
Yeah, so Gerg shared a tweet, and I actually watch FX Evolution videos, and in that video, well, in those videos, and also with Gerg's tweet that reminded me,
Yeah.
the market has reacted exactly the same way on every meeting. So I asked myself, why?
What?
Why is it reacting with an immediate downturn? And then the market rallies when they get confirmation essentially of what was priced in. So I hypothesize that it's algorithms. So the computer sees a headline, it sees rates increase, and it's programmed to sell. So
Oh.
I prepared by selling some calls immediately before immediately before the announcement, and then as soon as it dropped, I closed them. So, and we can cover that later. But basically, that strategy, and there's not many points in the market where you can have a reasonable expectation of how the market's going to move. So I kind of exploited that. And then did I know that it was going to rise up to a key resistance level as you showed in the previous image? Uh, yes, because it looks like it's hitting that resistance level at 313 or 313 and change, and it's ready, right? It's ready. It's either going to bounce down, which with what Christian is saying, it might appear that that's where Tesla might go over the next couple of days or through the end of the week. So maybe we'll go down to the 290s, but it is possible that the window dressing thing that we've discussed, and the AI day 2, and the delivery numbers coming out all at once will perhaps cause Tesla to break out.
Okay, wait.
We'll
So
see.
this is confusing again, as always. So this chart does not show the plummet at the last hour.
No, so this is the daily chart. So what you're seeing there, that's the
Yeah.
daily. So if you look back on the bottom, you have like the months there. And so
Yeah.
we've hit that 940 pre-split level multiple times, and you're seeing we're coming into that again at that like that 313 and change valuation.
Yeah, okay. I'm just saying the time that you took this, it was
Yes.
12 o'clock. You missed the plummet at the end. But this is
Right.
very interesting when you say this. I did not know this. I don't know if anybody knows this. So this is the same pattern that has happened every single rate hike that's happened this year. And you
Exactly.
are
Played it.
aware of that. I did.
I played it. If you want to share, go ahead to that the sold calls.
Okay, what did you do
So,
today?
so
Show
you
me what
see
you
how
did.
see how on the bottom, that's the first transaction. It says sell to open. I did that right before the market, the announcement was made. So I collected what is that, $1,396.
Yeah.
So that entered my account, which means let's define it for people. Uh, Selling a call means that I'm willing to sell my shares at $330 at the
Okay.
end of this week,
So
or sorry, at the end of September.
okay,
Yeah.
so you were basically banking that this stock was not going to jump to 330 anytime soon.
No, it's actually different because I'm making that transaction right at that moment where the market is. If the market then nosedives, the value of that contract starts changing. So the strikes that I'm picking and the dates that I'm picking are my safety net. But
Hmm.
the intention isn't to go the distance with these things. It's just to scalp a little bit of money. So it's sell that contract right
All
before,
right.
like I said, what I felt was a predictable possibility of a
Which is
dip.
what you thought that at the beginning of the day it was going to dip. Okay.
Not beginning of
That's
the day, right before the announcement.
okay. Gotcha. Okay. Then,
Yep. And then after we started that big recovery and we started going to 310, I closed them out.
okay.
And
So
so
you made
you could subtract those two, and whatever the math is, what is that, 250
200
bucks?
bucks. Yeah.
Yeah, you can also look at the price that I collected, which was $2.80, and then I
Hmm.
closed it at $2.30. Now I actually set that up automatically.
Hmm.
As soon as I sold it, I immediately went and said close it for 50 cents less. If I could just scalp
Sure.
$250, I'll do that. The
Okay.
reason is because I anticipated the market to start falling. So I
Mhm.
set that up to scalp it, but then I need to execute other trades, which we can talk about later. And so look at that, 250 bucks in like 10 minutes.
Gotcha.
So free money.
Because you knew it was going to happen.
Well,
Okay.
I had a reasonable expectation that it could happen again. Yes.
Okay. So this is day trading. This is kind of like the mind of a day trader.
Yes.
What you do.
Exactly.
And
The evolution.
yeah, I'm still a skeptic. You spent 2.5 hours with me last Friday, and what was interesting was you in that 2.5 hours, you watch and you showed me how to actually follow the stock through the day. You made 4 different calls, and they were all correct. and and it shocked me because it was the complete opposite of where I thought, it's going down and you're going to go, it's going to hit this level and then it's going to go back up, and or the way it's going to end at the day. That was a shocker to me that it was going to you knew somehow it's going to hit the all day high. And that was a shocker. So I still not a believer. I still think you're betting it all, but you're 4 in a row. I got to admit.
I wouldn't say I knew, right? I think it's the market
Probabilities.
moves. Yeah, the market moves in patterns, and that's the
All right.
thing to note. There's different types of traders. There's the hodlers, right? And there's all of the swing traders that aren't doing this day trading stuff. But the day traders and the algorithms tend to move in little patterns. And when you can draw a line, right, for across time, you could draw a little line, and it doesn't cross that line. What does that tell you, right? That's like computers trading back and forth. There's not any big orders coming in, and it's programmed to do something or go in a certain direction. So I wait for those. I call it surfing. I just wait for the wave
Yeah.
to start, and when I see that wave coming in, I either jump on or jump off.
Okay, so
Make
you
sense?
played. Yep, you're doing day trading. Each of us have something different, right? I have a different
Yep.
approach and different mentality, different time frames. So does Christian. Should we come back to you with day trading, or do you want to complete this now?
No. Move on.
Okay. So are a momentum investor. You're saying buy now, keep buying, hold it. You said that you don't play and you don't do options anymore. But what happened today? What were you trying to do? What were you thinking?
So, well, I still do some options. So I'm not as I don't have any details but I'll like Xander, but I'll just talk what I did. So I've been holding leaps for a while, Tesla leaps that have been doing pretty well. I've never held leaps this long. So when we had that little bit of an upsurge, I said, you know what? I think it's a good time to unload some leaps, not all of them, some. So I sold some of those leaps. So at a profit, of course, a nice profit. They were bought back in, with the dips in that 680, 700 area. So sold that, turned that into cash. And then I also, just because I think the market in the short term is going to face some headwinds, I trimmed some of my QQQ position just to raise some more cash. I didn't touch any of my Tesla shares. The cash that I sold from the leaps, like Xander was speaking about last few weeks, that probably go back to buy some Tesla shares now that it's dipping, sold them up higher, and now we can come in and scoop in this low 300 area. Maybe it goes into 290s, and I could dollar cost average some more shares again. So that's kind of what I did. So just little bit things here and there, but other than that, pretty much played it pretty straight. Other than that, yep.
Yeah,
Okay,
and that
then
makes a
why?
lot of
Yeah.
sense. You have end of September is historically the worst time of the season, or of the year actually, where the last 2 weeks of September are historically very bearish.
Yeah.
Why is that?
It's just
Just
how it is.
seasonal.
Yeah, just
And
seasonal.
October
So
too. The October, all the crashes. The one in 29 was in October. The 87 crash when the S&P was down, I think 25% one day. That was in October. Just a seasonally weak period. But yeah.
Okay, so
and
we
that
should. Yeah.
history is why he's thinking like this. So I think it's important to explore it, and that's a great fact to know that all of those crashes happened in October.
Yeah. But I will
Didn't
have
know
to
that.
say the number one reason that I'm bearish a little bit in the short term is Mr. Jerome Powell. That
Yeah.
man is not stopping, and I think a lot of the market participants did not believe the Fed would push this hard, and I think they want to get inflation down, and they're willing to break some things, and I think the market's coming to grips with that. So there still could be, again, I don't know what's going to happen. I'm just saying my opinion is there still could be a little bit more downside on the indexes and even
Okay.
Yeah.
stocks. Yeah.
Well, I guess where I got confused was that everybody was already expecting a 0.75% increase. That is what they did. And then we saw the stocks, and they kind of like were kind of anticipating it, and they were just a little bit higher. It was slightly green, the whole all these the stocks, and then after the announcement, it started to go up just a
Yeah.
little bit, but 1 or 2%. And so I thought, okay, it's all clear. It's all clear. It looks like that the market has said, okay, this is what we expected to happen, and it's just going to be fine from now on. But then it crashed at the end. Uh, was that algorithm trading? Was that
No, I think it's about what he said. So at 2:30 Eastern, you had the meeting, or the question and answers,
right?
and so that's where Christian can share why
Yeah,
why it's going down.
Yeah. So initially when it came out, the market dipped a little bit, right? When we just the announcement, the 75 and the talk, there's a little blurb that they'll talk. So it was a little bit of a hawkish, but everyone
yeah,
really waits to the meeting to hear what he has to say. And there was parts of the meeting where he talked about he'll get certain questions and he'll talk about a pause and look around. But there's other parts of the meeting to say, and I heard this, and this is what got me to sell some today. And this is an exact word. I think he said something to the fact we're not close yet, something like that. And I think when you hear that, not close yet, he made a gap before, like we're far from neutral. That was in one back in 18 where they kept pressing and pressing. In 2018, I don't know if you guys remember, but this is good market history. The market was going down, 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 down. It finally bottomed at 20% in 2018. I think it was like Christmas Eve. And the Fed kept pushing. I think the only thing that stopped them was Trump. Trump every day was berating the Fed saying, you guys are going to kill the economy. You guys are going to kill the economy. And I think they just had enough and they stopped raising rates and the market flipped and we were back on to a bull again. But this time, you don't have Biden berating the Fed. You don't really even have the public saying, you're going to kill the economy. Now I think they are going to start to get some pushback. If the market keeps dropping, and I'm talking about 5% on the Qs, 10% down, and we go 30, 35, 40, you are going to hear market participants and people that have 401k say, yo, Mr. Powell, you need to take it easy. You need to talk a little bit less hawkish because there will come a point where if the stock market drops too much, there will be blood in the streets and they will feel pressure not to do what they're doing right now. So I don't know. That's what I believe.
Yeah, and he also mentioned that he was asked the question about real estate and to reiterate what he communicated in the past, which was real estate is too hot. And he used the word correction. I think it was like something like serious correction, and that implies that you want real estate to go down about 20%, and that is that's pretty serious. So that I think that sentiment is showing that the Fed is not willing to stop yet, and they're going to keep pushing. Although it seemed like Christian, what was it like 50 and 25 for the rest of the year? Oh no, I think it was like 1.25 is the calculation of what more is expected. And then it's possible, I think he said that some of the people on the committee are going to be okay with one. But so it sounds like they're not going to do an aggressive hike higher than that. So what do you think about that? Is that am I thinking about these things correctly?
Well, sort of. So, I think people are going to digest this. And what I got out of it, again, very hawkish. There was a little bit in there where he said, well, possibly because he got the question, will you pause and look around? And he kind of said it, but he keeps reiterating inflation is their number one goal. He still talked about a tight labor market. So they're worried about that. So they don't care if unemployment rises a little bit because they still think there's not enough workers to meet it. And they're trying to bring people off the sidelines. So that was bad. And, like I said, look at the 2-year. The 2-year exploded over 4%. So now you could go buy a 2-year at over 4% and make over 4% on your money guaranteed, right? So that's putting pressure on equities because if I can go get, for a year, 4.1%, 4.3% with no risk, instead of the stock market, I think might go down 20% in the next 6 months. Right. This calculation now is being done by a lot of big money, right? Because we haven't had interest rates like this for a long time in this country. They literally, like a year ago, a year and a half ago, the 2-year was at like what, 0.2, like 20 basis points. I mean, I'm not saying exact, but it was like nothing. So now you can get 4%. So this is a big different strategy going forward. Tina, there is no alternative. That is now turned upside down because now you do have an alternative. You could go buy municipal bonds that yield more. You could go buy just regular treasuries. You could go buy corporate bonds and get 4, 5, 6, 7%. So the calculation has changed here, and this is going to make it really tough for growth stocks to get their footing. Even something like Tesla, this is a period where Tesla needs Q3 to be massive because this will be challenging. If they don't come in with a great quarter, it might be one of those, it was a good but not good enough type things in this environment. So I don't know what you guys think about that.
All right. Well, this is going to sound like a really, really dumb question. All right. Sorry. It's going to be a dumb question.
There are no dumb questions. There's no.
All right. So, both of you guys watched the Fed meeting like sentence by sentence. And I think it's important that we are aware of what's happening and the reasonings and so forth. But the question I have is, does it make sense to actually make a trade based on that? So I know clearly you did, Xander, because you're a options trader, you're a day trader, you're trying to make money on the
Occasional,
movement on the day.
Mm-hmm.
I'm shocked that you, Christian, would actually make a trade right based on that moment or that hour that you heard something versus is that something I should be doing? Or should I just be very aware of how it's going to impact the economy? Like I think you just taught me all that information, but should I have made a trade at that hour and an hour later and 2 hours later? I feel like I'm going to be outsmarted by everybody anyways. Tell me what I should be doing.
So that's a great question. This is where it comes to everyone has to do their thing that's best for them, and everyone's in a different situation. The reason I did what I did, and Xander can speak to what I know why Xander does what he does, and he could speak to it. But the reason I did what I did, if you're just a 25-year-old, a 30-year-old, a 35-year-old, and you're building, right? You're working, you're at it, and you're grinding, and you're building your 401k up, and your dollar cost averaging. No, I wouldn't have done anything. I would be working harder, or I would be finding ways to make money, to throw more money as prices get cheaper. So I want to, that's one way. But me, so when I speak about me, I'm in a different position. I'm a little bit older. I've already kind of, amassed a significant amount where I can do certain things. So when you're in the market and you have nice gains again, and even if it's a short-term gain, me not having any tax consequences, it might not seem like a lot, but if you have a lot of money and you're up 2% on a lot of money and you sell it, and the difference of selling it up top and getting that cash to deploy at lower levels, or waiting and not selling a 2% rise, and now you're down 2% on a big net of money, doesn't seem like it would be a lot, but it is. So if you can make that short-term calculation, which is difficult, but knowing what I knew from the Fed, again, I don't know if I'm going to be right. It could have rallied up, but I don't care. I would have sold it and it would have kept going. I still have money in the market. But knowing what I knew with that statement, and it just hit me, I don't care what's going to happen. I know what I think is going to happen. So I go to my computer, and when it's happening, and we see green, it was very green. And I'm like, this doesn't make sense. He sounds hawkish as hell. And the market's up 2%. The Qs were up like 2%. The SPY, Tesla hit a day high. So I said, I need to trim here. I don't care. I'm taking some profits. So in my situation, that made sense. So that's why, Herbert. So for you, no, you don't have to do anything. And for most people, you don't have to do anything. But that's why I did. And that's just, I'm sharing my experience. Yeah.
Herbert, I want to point out that he's stating that he sold some of the leaps that he purchased down low on the way down, or perhaps right after the recovery, and no shares were taken off the table. And that's the important part about understanding how these options contracts works, where you don't have to be the day trading gambling type, right?
Yeah.
But again, see, the big thing, the stigma with options traders and day trading is that that's typically for the gambler that's buying calls and buying puts. What I did was sell calls, right? And what that just states is that because of this bearishness that we are in, do I have in my mind, do I think that the stock is going to run right now? Again, you show the chart. We're at a key resistance level. What he's looking at is, well, we're at a key resistance level and the Fed is bearish, and I'm selling on the way up for this leap that I purchased way down low. Now, if we just downturn and we hit 300, which we just did, and it goes a little bit lower, we go retest those 280s to 285s levels. He could pick those leaps right back up, especially if the mood changes in a couple of weeks, right? Going into the delivery numbers in AI day. That makes sense?
That makes sense. Yeah. I mean,
yeah. And I just wanted to, go ahead. Go ahead.
No, I mean, some of us like you, Xander, are making thousands of dollars per day or weeks, and that's great.
Occasionally, like $1,000.
But it's fun for you, and it's money that you can get. Right. And then Christian, he's making bigger moves, and he's trying to just, like I said, he knows it's going to go down, so he protects the momentum, right? Yeah.
Momentum.
Okay. Very, very cool. I mean, at the end of the day, I saw today and I had no idea what was going to happen.
Again, I missed.
I did make the trade today. I did. I'll walk you through that. But and then again, the point that Christian made earlier, which is each of us has different objectives and different scenarios and situations. So I'm not trying to make $1,000 this week or 2 weeks from now. That's nice, but it's not, I don't want to spend my time doing that. And I don't think I'll be good at it. Right. And while I could do what Christian does, again, same thing. It's like, for me, it's like I'm in it. I'm just going to wait it out and just see it later, right? And it does add up. It does add up. I guess I'm learning from Christian a little bit, but I certainly wouldn't do it based on the day's actions. And again, I misread it, right? Because, I saw that it was saying flat. They announced the rate, which is what we all expected. It stayed flat and actually started rising. So maybe, even though it fell in the last hour, I still think that that's actually just algorithms or big movers. It doesn't mean that the next weeks or 2 weeks is going to be like a crash in the market or anything like that. In fact, this was expected already. So if anything had happened, you'd already...
Correct. Yeah, we don't know.
Of course you don't know. Of course you don't know. But I mean...
But for me, though, I just want to say this one thing for the audience. So we're all just sharing our experiences. So this is a good learning. So you could understand how these things work and then do your own research. So I'm not saying what I'm doing is correct or not correct. We're putting it out there, and this is educational for people. And this is what we like doing. We're bullish on Tesla, long term. In the short term, though, things can happen. And like I said, you can play it strategically, just like I did before. So what I would say to you, Herbert, is listen to what Xander was saying. Again, I'm not saying, and I didn't time all this perfect, but basically just to think about it, because I'm looking at it all day. You're not. You're busy doing stuff. Maybe you're doing other things. So when I see it and I'm looking at it, I'm like, okay, the Fed's bearish. I have these leaps that I bought a while ago at lower prices. And my intention is never to exercise them at the end. So if I'm up 60, 70, 80, 90% on them, and we get this, down, up, down, and I think that the Fed's coming in, and I think everything's getting killed, because it doesn't matter if you're a great stocker anymore. This is where emotions, but it could go down. Tesla could go down 5, 6, 7%. Your leap will be down 15. So if I could catch that green, I'm like, why is it green? I don't know why it's green. So if I can chop it, and I knew I was going to chop it at some point, so it's a good time for me to chop it, get that money, and then maybe come back up and get Tesla at reduced prices at shares.
So, I think the big clarification here is that if you are talking about stock that you own, you may not want to buy and sell it, moment.
These are options. These are
option contracts.
Options that I'm not going to actually turn into shares.
If you're going to do option contracts, then that's what you should be doing. It's not necessarily just holding that contract forever. You should be like timing it properly, and they're just contracts. And so you make the money, you buy it again low, and you keep going. Okay, that part makes a lot of sense to me now.
Yeah. So Herbert, this whole perspective that we're gaining by analyzing the meeting and the stock movement, it affects buying and selling decisions. As simple as that. So if you're just holding your shares, there's nothing to do. Don't watch us. we read some.
Don't watch you two. You can watch me.
yeah, exactly. Don't watch us. But if you want to understand like how we're chewing on this stuff, this is the real process that we go through. We talk with different perspectives. So so like you sold a put. Did you close that put out?
I did.
You did. Very good. Did you make some money
this morning, because you told me to do that. Yeah.
Very good. Very good.
$300. Yeah, that's right.
Well, I'm just percentages is my favorite way to look at things. I don't
in a couple of days. That's the difference.
A couple of days.
So it was fun.
A couple of percent, right? Because here's why this is an important way to think for me. If I could make 10% on any decision in a couple of days, when people invest their money, right? They invest their money and they wait in the S&P 500 index fund, and they wait an entire year and hope to average 8 to 10%. And I just did that in 2 days, right? That's amazing. So then your brain goes, well, why don't I just do this with all of my money and make that, and then I'm done for the year? Well, the problem is, you kind of have to mitigate your risk and understand that. So buying and selling decisions can impact. So for Christian, he thought, okay, we're kind of at a local top for what for those leaps that he bought, that he was deciding that he wants to cut back. In his mind, he thinks that we're going to have a pullback, right? Is that fair to say, Christian?
Yeah, and I may
What
be
do you,
right, and I may be wrong. Yeah.
so where are you like setting the line in the sand if it gets down to what? Will you rebuy leaps, or are you going to just buy shares at that time?
So
Any
yeah, I'll
thought process
determine
on it?
that. So right now, like I said, I do things. I'm active, but it's active in a sense of I'm not doing trades like you do it every day. I'm looking at um, positions, like moments in time where I see opportunity. So today
Mm.
I saw opportunity that when Tesla ran up, and I'm looking at my leaps that I know I'm not ever going to convert into shares. So, but to Herbert's point, I want to be clear. The leap, you could have held those leaps if you believe, because they were long dated, June 24th. So if you believe the Teslas are going to cover and everything's going to be great, that's
Yeah.
fine. But
Yeah.
I can come back and rebuy leaps. So what I'm saying is I use that money and like I said, made a nice chunk from that money, 70, 80%. So you could say what you want, but it's like, okay, well, let me take that win. Like sometimes you take a win, it
Of
feels
course you
good to
should.
take the win
Yeah.
and come back at it. But
Yeah, that's the
yeah,
purpose of an
yeah,
option contract is
right.
when it
It's
wins,
an option,
close it.
right?
It's a contract, not an actual share that you necessarily own.
And if
Okay,
you change
so
your mind, Christian, and you're wrong, so it
So
seems like you are an if then else type of investor.
no,
If
like so say I would have chopped it. So I chopped it. Say it would have kept going. I wouldn't have cared because I still
No,
have
but if
oh,
there's a pullback, let's say there's a short little pullback, and now we accelerate, we blast through that resistance line, and we start going up, and delivery numbers come out, and you were wrong to let go of those leaps. Do you reconsider that? Is that something that you
no,
do,
no
or
regret.
no?
No,
You're
no.
just
No, made a
you're just taking the
very
money off the
profitable
table.
trade. That money can go to
Hmm.
buy something. It could buy an ETF. It could buy more Tesla shares. If we were at 310 a second ago on Tesla, and now we're at 300, anything I buy under 310 was better than when it was at 310. That's the way I look at it. I look at it
Yeah,
very basic,
yeah.
right? If I could buy the
I,
share at 292, so when we're at 310 and all your shares are valued at 310 in that day, say in 3 days from now, those shares are now valued at 294. Well, you could say you should have never sold, but if you actually would have sold some at 310, no one knows this, and you could rebuy them at 294, you just got more Tesla shares for no work, right? So no
yep.
one thinks of it like that. And the other thing I want to make clear here, Xander enjoys doing what he does. Not everybody wants to day trade to make, $1,000. I know it sounds crazy, but not everyone wants to do that or is capable of doing it every day. And some people love doing it and they love the little wins. I made 500 here or 1,000 here, and they're big wins. Don't get me wrong. What I'm saying is not everyone's cut out to do that. So when you ask, why doesn't someone do that or why, so, and then the other thing is a lot of traders, there's a stigma. Like I said, most of my thing is long and I'm holding, but I do trade around the edges. We've talked about this a million times. So the reason people say traders don't win in the long run is because what they're thinking is you're in, you're out, you're in, you're out. You could take a portion of a portfolio and trade around it. Now, if you say
Yes.
you're not going to win and you're going to lose most of the time, that's fine. Some they say, what is it, 5% win? All I know is my history, and I know that my trading most of the time wins. So, you know, I don't know what to say. It's worked out. Maybe I've been lucky. Great. I love being lucky. I'll be lucky all my life. That's wonderful. There's a book that says people said I was lucky my whole life. I'd done so much, and he had like hundreds of millions of dollars, and everyone says you were lucky. He says I'll take lucky every time then. So that's what I do. So if
yeah.
I'm trading and everything I'm doing just kind of works out, and it doesn't always work out, but for the most part, and some luck has to play with it, I'll accept that and I'll move. And like I said, if I played it wrong, not the end of the world. There's always tomorrow. So I don't kick myself every time I do something. I feel in my gut what I do. I use some technicals, but a lot of it is gut. The Fed came out today, and again, they're very hawkish. And when I see the market rocketing up on that kind of news, for me, I think it's coming back down. So I'm chopping somewhere because it's going to
Okay.
be, up 2% to down 2% is a what move? It's a
You're
4% move. It's a 4% move. So say you had $100,000. That's a $4,000 swing. Say you had $1 million. That's a $40,000 swing in your portfolio.
It can go either way.
Think about it.
I got you. I got you. So, okay, let's recap. I think we're going, and I'll tell you my story, because I know some of you guys are going, oh my God, Herbert's now becoming a day trader. That's not what's happening. I'll explain the thinking. So we have Xander, who we've already talked about. So clarify, all three of us are not all in, but very much support and have conviction in Tesla. The vast majority of each of our net worth is in Tesla. And then in the case of Xander, he loves to play, when he calls the edges, just a small portion of what he has. And he has worked out how he can make $1,000 here and $1,000 there, and enough each month to continue to do this on a regular basis. But it takes work and takes a study, and he's done that. Now, Christian, what he's done is he looks for momentum, and he just explained it, and he does that. Okay, so where I'm at is that there was very strategic reasons why I did what I've done in the last 6 months. So before I met the two of you, for decades before that, all I ever did was pick one stock, buy it, keep accumulating, and watch it grow over time. And like we all said, that strategy has proven to be very lucrative, more lucrative than some people who don't do day trading properly, or some people do momentum and they call it wrong. So it depends on who that person is, right? Okay. Now, what happened to me was when the stock fell, and I'll use pre-split numbers because that's what I remember, right? From 900 to 650, the world was about to end, right? Inflation numbers came out, it was at 650. And clearly, this is a macro-driven reduction in the stock price. So I was going, I got to buy, but I don't have my cash because I'm all in. Remember the conversation we all had about having dry powder in case that scenario happened? Well, I didn't do that as you did, Christian. So the reason I did at that moment was because I knew that this is a temporary scenario that might last 6 months to a year. It's going to jump back up again, but I didn't have cash. So what I understood that I could do, and Xander walked me through, using my IRA money, was convert that stock that I have, sell it, as painful as it was, turn it into an options contract, a long-term leap. And that's where it was the bet was, do I think that the price of the stock will get back to $900 by June 2024? Yeah, from $650 to $900 pre-split. And so I said, that's a fair, safe bet. And that allowed me to play that moment when I saw it from 650, can it bump back out? And that was the reason I did that.
How many percent is that contract down now?
So because it's at 900, I am 100% gain. Basically.
Wait a minute. Let's do the math on that.
I know.
So the stock price only moved up
30%.
$250.
30%, yeah.
Contract is
worth 3 times more. Yeah.
3 times more.
That's what I did that because you taught me that.
What ratio did we discuss when you were purchasing that contract that this was going to, for every dollar that Tesla moves up?
$3. Yeah.
$3.
So the difference with the option contracts is that if it gains, you earn some amount of multiple 3 times around. But obviously, if it falls, you will lose 3 times what you would have lost if you had
3 times as fast. Exactly.
But at 650, because the stock already fell significantly, that was my only play. If I had dry powder like Christian, I would have bought more. And I think many of us did buy more. Okay, so that's how I got my feet wet. And I bought a long-term leap, which I thought was comfortable. Recently, now I had a different objective, which is I have cash account. And in my cash account, and again, just pieces of it, guys. I'm not talking like I'm going crazy or anything like that. I wanted to play this idea that I do think that the stock is still low and that Q3, Q4 numbers will come out. And so I started thinking, okay, well, instead of a long-term leap, because in this case, my goal is to actually generate cash, not just, my IRAs. I'm willing to do long-term leaps and do that. Only for that one scenario. The rest of it, I'm not going to do anything. I'm just going to leave it like I have always have. But in this cash account, I wanted to see if I can make some cash in the next 6 months because of this unique scenario. So I started getting greedy. I started going, I want to do this. And so I did do my first kind of, I'll show my screen here. I did my first call where Xander helped me do this. And this was the first one I did, which is the one at the bottom, which is, do I think that by March 17, 2023, that the stock would be at $300? And I don't remember I did this. I think it was only 3 weeks ago. Really, I think it was just 3 weeks ago when I made that very first option call. And Xander taught me that instead of doing, January, to give yourself some buffer, wait until kind of like a few months afterward. So I did the March 17. Now, the issue with the March 17 is that it doesn't fall after the earnings of March, which would have been the ideal scenario, would have been ideal. But, the $300, do I think it's going to happen? So I felt comfortable doing that. And I knew that with the recession happening, things could fall, but I just felt that getting back to 300 was something that was doable for the stock. And of course, I somehow, luckily it happened for me that even today, now, of course it can continue to fall and everything could be an issue, but right now I'm very much in the money here and I'm ahead. And so I can afford for it to fall some more or whatever. But right now I feel comfortable with that. And then last week I wanted to do more. And so I put in, and then this is where Chris, this is where
gamblers, it's starting. I want more.
No,
and Herbert, this is important though. Just tell the audience, this is great, but tell the audience you should know your downside. Do you feel comfortable knowing, say the stock went down 30% in the next month, let's just say.
No,
do you know what'll happen to those things if you don't touch them? You both have told me that in this scenario, this amount of money, I just basically should expect that I will lose all of it. I can lose all of this. That could happen, and right? So, I just want to let the audience know that there
worst case scenario
with this if it goes the other way. Yeah. No, I know. I want to make sure that the audience knows. Yeah.
I'm doing 6 months, right? So it's still risky. Absolutely, it's not the 2-year one. It's very much dependent on what happens in the macro. I can expect this to go away. Absolutely. But I'm just playing with it. I'm playing with it because I'm seeing maybe there's an opportunity here. I'm willing to do this. So here's where the cool part was that last week I wanted to go ahead and put in more. And then what Xander told me was, well, why do all of it? Why don't you split in half? And so first he said, why don't you wait until the Fed meeting today? Because the Fed meeting today, we're expecting that there might be a huge, there's potential for it to crash like crazy. And what he taught me is that if you were going to do a call, you want to do it when the stock market is falling. That day that is a huge fall, that's the time you want to think about doing a call. And so I just did half of it. And I chose April 21st, 2023, this one at the top, which is, do I think that by April 21st, it'll be $316? And I did that a week ago. And felt very comfortable. Again, April 21st. So January, February, March, April. I've given myself a whole month afterwards, after the Q1. So there'll be Q3, there'll be Q4, and there'll be Q1. And I think by then the earnings will keep building up. And I thought, okay, yeah, I think it'll be 316. And so I did that. Again, very lucky. This was just last week. I'm up in it now. Then what I was waiting for today, which is what Xander taught me, was that if the stock fell because of the Fed movement, I was ready to deploy my capital. It did not do that. But what I did do in today's call, I watched it kind of like rise up, stay up a little bit up. And then what I did was I did a low limit, expecting it to crash even later. So I did catch the fall, which is just lucky because I set my limit a little bit lower and I was willing to just let it go for the day because it was going up, right? And then it did fall. Now I didn't I caught it like in the middle. I didn't catch it on the bottom. Who knew how far it was going to go? But I kind of still did the right thing. So,
well, what about the money that you had waiting? You did something with
the put?
Wrote a contract. Oh,
right.
The put. Wait,
that one?
You're doing puts now?
All right. Well, this is you. So last week you told me to split it, and you told me it was me because you told me to split it in half. But in the meantime, while I'm waiting for that, this is cash. I have cash sitting there. While it's waiting for me to, the Fed to fall, you suggested, well, why don't I do a put? And so the put is this thing you taught me, which made a lot of sense to me, which is the bet was, do I think, this was a week ago, so do I think by September 23rd, which is 2 days from now, do I think that if the stock falls to 295, I would be forced to buy it?
To rebuy it. Where did you
to
sell it
to
at?
rebuy it. So I got $500 something, $500 something dollars.
No, no,
So
no.
the
Where
put
did you sell your stock at? What
oh
was the
so yeah, I sold it at 300 to
right at
get the
300? Okay.
cash. Yeah, I sold it at
Got it.
300 to get the cash. The cash is sitting. And then he said, "Well, why is it sitting there? Why don't you consider a put?" And the thing about the put is I will get 600 500 something dollars in my bank account right then and there a week ago. And if the bet is that if it falls to 295, I'm forced to buy it. And I thought to myself,
Correct.
well, that's a win, right? Because I
Yeah.
sold it at 300. If it falls at 295, I'm very willing to rebuy it at 295. I still made money. Why would I be disappointed if it fell to 295? The big risk I'm taking is that if there's a market crash, everything goes to hell. My 300, I would have be forced to 295. If the
No,
market
no.
fell, it would have been
The
worse.
big risk is that you sold at 300 and it rockets to 350, and now
Sure.
you just have money sitting on the sideline.
Uh, yeah.
And yes, you rebuying it in a non-taxable account. That means that's just amazing, right? But
Yeah.
why don't people do this? Right? Oh, I could just keep getting 500 or 600 bucks. Well, the risk is that your money is not working for you as well, because you're right. You could have a much bigger upside than the $5 that you picked up per share there,
Yeah.
right? If you do the
And
math, you picked
so,
up six
yeah.
bucks.
So I made 500, or I got $500 in my bank account, and it did not fall to 295. And if I waited till September 23rd, which is 2 days from now, I would have just pocketed the whole 500. But I
Yes, but
decided
you have a
to,
problem, right? You have a
yeah,
problem. You cannot utilize that money. You
yeah,
can't just buy this call contract that you wanted to buy. You had to close out that
I had to
put,
close
which
it
means you had
out.
to
Yeah.
buy to close the put.
So I bought it, close it. I ended up making $350 for 3 business
Three
days,
days, right? Friday
which is
to
great.
today.
It's wonderful. But it's the point was that now I had the ability to go and make this call
And
now too.
and was
So
this call was the cost of this call lower than what you could have picked it up for on Friday? Did you track that,
I
or
don't know.
okay,
No, I
okay.
don't know.
That's the important thing, right? So the whole patience game, and perhaps you went a little too early. Closing out the put today was a great idea, but perhaps tomorrow is going to be a big red
Yeah.
day. So it might have been better to wait. So this is the main point is you want to know how to use the tools, but it's really hard to be accurate with your decision making to get maximum or perfection, and that's a common pushback that I receive from people, is that, oh well, if you're so smart and you know so much, why didn't you just sell it right up there and buy it at the lowest point? And the
Yeah.
reality is you can't do that, and that's not the goal. The goal is to just make good decisions that net end up positive.
Yeah. Okay. So for me, I only made basically in my mind two different decisions, right? The long-term leap, uh, and then these 6 month calls. And then that's it. And I'm only doing that because of this particular scenario right now, which is the Q2, Q3 numbers in Q4, Q2, Q3, Q4, and Q1 numbers are going to come out. I think the stock will go up despite
And
the
AI
massive
day
impact.
and credit rating upgrades and the Twitter
Yeah,
overhang being removed.
I'm willing to just, again, earnings is what's going to move the numbers, and I think eventually you'll have to move, right? So that's all I'm doing. Otherwise, if it was a regular scenario where things are moving up, and normally I wouldn't be doing this at this point. I just think that's my guess, my own bet. So
Yeah, sounds good.
yeah,
And you're
so
learning, right? Even if like I love what Xander says. I'll just say this: even if you don't use these tools, knowing that you have the tools, if you want to use the tools, that's great. You could educate yourself on these things, and you don't have to use them, or you could use them very strategically, right? That's kind of what I do. I don't use them all the time. I use them when I see an opportunity. And of course, when we're talking, we're not talking the whole portfolio, right? We're
right, yeah,
talking
yeah,
pieces of the portfolio, implementing these strategies.
Always less than 10%. So you're doing these things. Herbert mentioned he did like 3% or something like that,
yeah.
or So that's a reasonable. So if that goes to zero, you're not crippled.
Well, yeah, and so in my case, again, for those people who are all in investors, right, who really believe in Tesla so much that you put in as much of your assets in there, and then but you want to buy more because you feel that there's an opportunity. This is what drew me into this concept of the long-term leap. That's the only reason I'm doing this right now, right? Because otherwise, I would have to, I used to like sell stock in order to generate cash that I needed, or I would, find how more ways to get more cash, right? But this is a way um, to actually take advantage of a potential opportunity that you see at that moment. And again, just use little pieces of it. So it was fun, but I don't think I'm going to continue doing this. I'm going to just, I'm going to wait it out now. This is it. I'm done for the next I'm going to watch and see what happens for 6 months. And then you will help me decide when I can just decide to just take, if it's up in the money.
Nope. Didn't
Yes,
answer
you
your
are.
call this morning. Why didn't I answer your call this morning, Herbert?
That's good.
You're
You
s-
should learn,
you-
Herbert. You should learn. If you're doing, look, no, Herbert, I was giving you great credit. You learned a skill, but you got to finish it now. You can't depend on Xander
That's
every
right.
time you want to do
no,
something.
no.
No,
He's
he
on my
needs
Trains
to
are off,
consult.
buddy.
But
Trains
he's
you
on my
should
speed
are
dial, and he did not pick up the phone when I called him this morning. I'm pissed.
you
Yeah,
should
well,
know at least you should know your upside, and I think you do. That's what I want to get out. You should know your
No,
upside. You should
Xander.
know your downside.
No, Xander.
you're in the 9 feet. Swim.
What if
No.
something, God forbid, look, I'm not even going to say it. How about if Xander's not available? He's in Bahamas, and he forgot about you, and he's got no cell phone, and he's on the beach. What are you going to do? You're going to call
Well,
me?
that's
I'm
not
not
the way I
picking it
look at
up.
it, Christian. That's not the way I'm looking at it, Christian. The way I'm looking at it is, didn't you guys say the best thing in the world is to research and to learn? And so
You're
I've
right.
got a thinking, I've got a
Educate,
decision I'm
right.
going to make. I want to talk to my friends who are smart and say, what do you think? Who are smarter than me on this specific area, right? If you were about to make a decision on a surgery, wouldn't you call up a friend of yours who's a doctor to say, hey, should I or shouldn't I? That's what I'm doing. Second opinion, third opinion.
I
Okay.
agree with that
But it looks
to an
like that my friends
extent.
aren't there for me when I need them. That apparently that's the case
That's
here.
Exactly.
Yep.
You should know. You need to know that. That's what I just said.
Yep. That's it. You only have yourself to blame when it all blows up in your face. That's the
There's another
point.
reason why, Herbert. This is important. I know you think you can call Xander and everything's going to work out. Things happen in the stock market that no one can see, and they can happen fast. And if you're doing things and you don't know exactly when to get rid of it or when to keep it, and it doesn't come from inside of you, and you're waiting on Xander, there will be a little thing going off in your head. Xander wants me to do this. I'm not sure. Unless you're just going to go with what Xander says every single time, then I guess it's fine. But
Yeah,
if
but then
you're
I'm gonna
doing
have to
these,
charge him
right.
money for all those.
What I'm trying to get across, and this is what I want to get across to the audience, because it's setting a little bit of an example of if someone out there in the audience says, well, I know this guy knows everything, like Xander was talking about it, don't just listen to people on YouTube or even people you respect. You need to do your own work and learn and work through it. If you just expect, I'll take my
That
money
is
and
my
I'll buy.
work. My work is making that phone call. And I would have learned today, he would have shown me what Gergiven's tweet was earlier, that, all Fed meetings, this is what the typical pattern is. I had no idea that that was the
Hey,
case.
you could
Now he
just
taught me.
follow me on Twitter, and I'll I'll
Exactly.
retweet.
Well, I definitely.
But even so, I have to say, like, I'm not trying to be a stick in the mud.
Notifications on.
Even with Gergiven's tweet, Gergivin, yeah, maybe he's got it right the few times. What I'm saying is, it's
No, I
so
know.
random, some things. So all I'm saying is, you're fine. I'm only playing with you, but it's good for everyone to know as much as you know, where you're confident with yourself that you can make the decisions without a consultation.
Well,
I think
so
it's
listen,
important.
here's where you guys are saying things one side of your mouth and the other side of the mouth, okay? We don't know what's going to happen. You don't know what's going to happen. Then why could you make a decision?
That's not what
How
I'm
do you,
saying, though. I'm not
yeah,
saying
well, then why don't I call you and you tell me what you think's going to
no.
happen and I'll trust you. Otherwise, because I don't think I know what's going to happen, I'm not going to play. I don't want to do it.
That's fine. This is a good discussion back and forth. So let me go, then you can go. What I'm saying is, you're right. I don't know what's going to happen. That's not what I'm saying. That's a given. What I'm saying is, I don't care that I don't know what's going to happen. I don't ask Xander what's going to happen. I don't ask you what's going to happen. I don't ask Gary Black what's going to happen. I do what I want to do from my knowledge base. So what I'm saying is, you can listen to these other people, but what I'm saying, your trading and your philosophy should come from within. I don't think Gary Black picks up the phone and asks Ron Barron, hey, Ron Barron, what should I do here?
They do all the
Gary
time,
Black is
buddy.
running a price. What I'm saying is at some point you need to take the training wheels off and make your decisions for good or for bad, because I don't know what's going to happen. Xander, as much as he thinks he knows what's going to happen, doesn't know what's going to happen.
I
That's
don't
what
know
I'm
anything.
saying.
What are you talking about?
You'll feel better if the decision, if you screw up, you'll feel better if it was your screw up rather than my screw up. If I tell you to
That's
do
right.
something and it goes south,
I don't think
no,
so.
I know you won't
I
blame
want to say,
anyone, but it'll
Christian did it.
feel different. It'll feel different if you did it
Just-
rather than me. I said, hey, go buy this stock, Xander. Herbert, and it went to zero, and you lost $10,000. You would have rather it was your decision rather than mine. Trust me.
Yep. And that's he's not wrong, right, Herbert? Ultimately, he's
No,
not
of
wrong.
course not.
And it's really just about understanding and following your gut. Just think about it. A year ago, I never sold a call or a put or analyzed the market. I didn't know anything about Fed movements and decisions. And when the announcement in January came from the December minutes, that was the first time I even learned about that stuff. Then I started talking with Christian, and it's like it's a game changer, right? Knowledge is power. If you can start getting your head around this stuff, you start seeing the patterns, you start understanding. That's right. You can't trump experience. So the Christian has a lot of experience. So his gut is saying, "Oh, we're gonna maybe come down a little bit." So he's cutting it. I think maybe you have a little temporary dip, and since I know I know how to use some of the short-term tools. That's where I find the opportunity. And you kept saying $1,000 here, $1,000 there. Believe it or not, I'm still a mentality of a minimum wage worker. So for me, if I can pick up $250 in a day or $200 in a day, I go, wow, that's amazing. I didn't have to do anything. I was in bed and on my cell phone, and with my decision-making power, I made this money appear. And that's the real lesson, is that you have to get yourself to a place where you have enough of a portfolio to be able to use these tools. These are advanced tools, right? The options contracts is 100 shares worth of stock. With Tesla, that's $30,000 for you to be able to sell a call, right? That's $30,000 worth of buying power for you to be able to sell a put. So in order to not be the gambler in the casino hoping and thinking that you know something, you have to get to this place and then have the confidence to make those decisions. And once you get good and you do that with a small amount of money, what happens when you get a big amount of money?
All right, here's my thinking, and it's a very simplified approach, and I'm probably wrong here, but let me explain to you my thinking, okay? So it's very, very risky to invest your money in any kind of investment. We're talking about stocks right now. So there's the way to think about it would be that there's the macro environment, which is very, very risky. And I don't think any of us can actually predict that very well. No one has ever predicted the macro environment. And you never know what's going to happen next month, 3 months. There's going to be a war, inflation gets out of control again. Who knows, right? Yeah. Then there's the company. Very hard to know which company to pick, if their business is going to succeed, if something bad happens at a company and all that, right? And then there is you can even increase your magnitude of risk if you start bringing down the time frames and you start talking about days or weeks or months, much higher risk tolerance. So for those three angles at this, it's very, very risky. But the reason why what I'm doing and what you guys are doing is that we look at Tesla and we feel like it's risky, but it's probably, I don't know, if other companies are 50%, toss a coin, this was probably a 75%, 80%, a little bit on the less risky side. There's still a lot of risk, but that's why we love Tesla. All these reasons, metrics, we think that it's less risk. The macro, we cannot guess. We don't know. It can be. None of us can guess. And then because I can't guess and determine what's going to happen on a weekly basis, like you guys have that gut, you kind of look at certain things and you want to play with a small bit of your cash on that, then you can do that. But for me, I still can't do that. I don't want to do that. I don't know. If you don't know what you're doing, then it's so risky that you're just gambling anyways. And I don't want to do that. And it's not because I just don't want to, like you said, I don't have a thesis of it when it becomes within a month, let's say. And right now I have a small thesis of what's going to happen in 6 months, barring macro. That's
Yep.
what I'm doing.
Good.
See?
Very good.
You like that?
Right.
Very good.
Yeah, it's awesome. That was awesome. And if your thesis plays out, you're okay with that downside. So you
Yeah, because it's a small
understand
bit.
what you,
Yeah.
right. But still, it goes to zero.
And
So
I
can you
think the
pull
end
up?
of this whole time, yeah, is that
Go ahead.
after I've learned all this options things, I may not do this anymore. Like I
You might,
might
yes,
just go
yeah,
back.
It's too much
Exactly.
on the ticker, on the
yeah,
old
that's a
ticker
lot.
there. Yeah.
That's what I
No,
told
no,
you
actually, no,
initially,
no.
Herbert.
Just to be clear,
That's what I told you initially.
no,
You
no,
might
no
do this and
emotions.
say,
Yeah,
long-term investing is the way to go. I want to be very clear about that.
yeah.
Long-term investing, buying and holding either ETFs or great companies that go up over time is ultimately you're going to win doing that strategy. It's always proven to be that. Yeah.
No, this is not because I'm going to be stressed or I'm going to be no emotions here, Xander. That's not the reason. It's just that I think that at the end of the day, like you guys are teaching me, is that if there are situations that look like you have a higher odds in your favor, then I might play that bit. And this scenario, I think, is kind of unique to me. Like, I don't know if I'm going to get, like, I'm not excited about the AI day or this day, and I'm going to play that or the
Okay.
Q, that's not
So
what I'm going to do.
can you pull up that trade that I shared with the with me playing a shorter term contract today? Um, and then I'll dive into it. Yeah, is that it?
Mm-hmm.
Yeah, so look at that. I bought 3 contracts. Sorry, I bought 5 contracts for the 305 strike for October, right? End of October. Reason I chose that date, again, none of this is financial advice. This is just what I'm doing, and here's the rationale behind it. When we turned down, earlier I shared that I sold calls and I closed them, and I set it up to be automatic. Why? Because I had a feeling that we were going to come back up. So I was really interested in I was willing to gamble, as you could see, $12,000. I don't care if it goes to zero. Um, if I'm wrong, that's okay. It's just, that's the gamble. But I stack the deck for me that I'm correct in my thinking. I anticipated this downturn from the Fed announcement. I deployed 12 grand, and then 45 minutes later, after the stock starts rocketing, I immediately start closing this stuff out, right? I'm not looking at how much money it's worth. I just looked at it and I go like, wait a minute. The thing that I bought for 23.50 is now trading for 26.25, but that you got to add 2 zeros to it. So it's $2,600. And then I start scaling out of that position. And the net result is what you see is I spent 11,000 and change, or almost 12,000, and then I collected about 10,500. But if you do the math, it's right around $1,000 that I invested, and I'm holding this 1028 contract. So that's worth, as you saw, about $2,700. So I'm holding a $1,000 cost. Now, if I was more patient and I didn't sell those 2 down low, and I waited and just liquidated all 4 at the very top, again, not possible. So right now I'm sitting on a contract that cost me net $1,000, but it's currently worth $2,000. So you see the power of that. Now I would have to get rid of that at a profit in order to to make money. So, but now it gives me a free option that if we do have a nice delivery day, deliveries and production numbers, and nice AI day surprise or something like that. And this kind of contract even lets me hold it all the way to the financials coming out.
Okay.
Obviously, it won't be worth as much in time premium because it's going to be so close to it. But again, I probably won't hold it that long. I'm going to take the win, and whatever percentage that is, that's the short term knowledge is power making a strategic play where I am a gambler, but this is the strategic thinking that went into it. I hope that helps.
It does. Okay. Well, hopefully our audience is split up between three different segments. There's the people who want to hear and understand this day trading, and you've learned a lot, and I have as well. Then there's folks who want to understand the market movements, the months, and the key drivers of that. And that's Christian and Xander, very sharp at that. And then there's just me.
Yeah, but you've evolved.
Nothing to learn.
I think the important thing that for people to take away is that you started out buy and hodl, and you had a curiosity. Wait, let me think about this. You had a itch that needed to be scratched, and we helped you, shared with some knowledge, and you're starting to scratch that itch. Okay, good. I said that right.
Yeah, it is. And I think again, the wrap up this whole conversation, it's about the risk, the how do you control and understand what the risk is, and if you think that the odds are in your favor, and then are you willing to make that bet? And I feel like my bets have still been very safe. We'll see, right?
Yeah.
But one word,
relatively
we haven't
safe.
used it yet. I think it's an important word: probabilities. There are no certainties in life. You know, me being this big macro guy and I love stoicism and philosophy. What is the probability if I do X, this occurs? If the probability is 60, 70%, then that's a good probability and you might want to push it. It doesn't mean you're going to be right all the time. And it doesn't mean you can't, if it's going not your way, that you don't cut it and maybe do something else, but you're playing probabilities in life. And this is what stock market investing is. You're playing a probability, even if for all the people that talk about options, and when you buy shares in a stock, there's nothing saying it's going to go up. You're making a investment, but it's still a bet that you believe that this stock will be worth X more in the future. Well, no one knows that. You think you do from your research and everything, but there's no certainty. You're playing a probability game. So I think that's important.
Yeah, but that's why people love dividend stocks, right? They love those because it gives them some kind of cash flow. But Herbert is in Tesla. There is no cash flow, and what started this whole conversation.
He used to be in Apple. He loved that dividend money coming in. He ain't got it no more.
But there's no more growth. Right?
No more growth.
So, but Herbert, right? You wanted cash flow. So how do you achieve that? So now you're doing that by being a gambler and buying a short-term call. And my whole lesson that I'm trying to teach, or not I say whole lesson, I keep saying that, but one of the lessons I want to make sure that's very clear is I'm not gambling as people accuse me of. I'm long-term, but I need to figure out how to monetize that portfolio. That money is sitting there, and yes, it's growing, but it pulls back all the time. Well, how do I, if I don't have a business or a job, and I want to retire like that guy over there, right? He's the only one of three of us that's retired, or are you retired, Herbert? Technically, I know you're doing startups and founders, so
not retired.
Not retired.
By choice.
Right.
Yeah.
So what is he doing? Right. See, he has this ability that he uses sometimes. Are you writing those call contracts? Are you selling those?
Yeah.
Okay.
I'm not gonna. So I'll share a quick thing. So with all my Tesla shares, like you do sometimes, I write calls, cover calls on those things, right? They can generate a lot of money. So today I closed them. I closed them. So yeah, it generated cash, and so yeah, that's a way of generating cash.
Gotcha.
So, so basically,
If you're closing them, even though you think that the market is going to come down.
No. So yesterday, this was a quick one. Yesterday, I sold calls.
Okay.
And today, they were worth less than what I sold them at. So I closed them for a quick profit.
Nice.
Right. So
beautiful. So you monetize your portfolio.
Right. So it's a way of doing it. And the risk. So let me get, without getting into specific. So the risk was, if the stock went through the roof, these were longer out calls. They weren't like so near term. If the risk went up, I profit from the stock going up, and I get the premium from the calls if that were to happen, unless I wanted to chop it and I was getting greedy and I want to go out there and roll them out further. that's for another discussion. But essentially, Xander's right. You can use your portfolio, and I don't like using the word gambler. It's a bad thing. Strategist. So options is a strategy that you can implement in your portfolio. That is what the word we should use, as a strategy. And if you're not comfortable using the strategy, don't use it. That's fine. But a lot of people are interested, and you can use it responsibly. There are ways, like we talked about, covered calls, because covered calls are actually a conservative approach. It's actually possibly capping your upside. So that's a strategy that most people think. They hear the word call, oh my God, that's risky. A covered call is actually a conservative way to make money on your shares if the shares are just doing nothing and they're just kind of doing nothing, or they're going down, but you don't want to sell because you're long term. But you believe you can make some money, and you can sell those calls. If you have the 100 shares, or if you have 500 shares, you can sell 5 calls on that portfolio. And as your stock's going down, you're making some premium. So even you're down 20%, well, maybe only down 16% because you sold those calls. So it kind of softens the blow, and you're getting a little bit more premium where you could deploy later. So it's a good strategy, safe strategy.
Wonderful. Wonderful, guys. We covered a lot today. So if you learned something today, please tap that like button, share it with more people with Tesla, and we'd love to hear your comments. All 3 of us are going to reply back to the comments. So please go ahead and tell us what kind of strategy you're going to pick. Do you think it's gambling? Let us know. Thank you, guys, everybody. See you next time.